Welcome back, traders. Sasha Gogolin, secondskiesforex.com. Now that we have looked at directional moves, we have looked at trends, we have looked at swing points, we have looked at ranges, support and resistance, and also talked about order flow, price action, impulsive and corrective moves. Now I'm sure you're wondering, this is all fine and dandy, this is great information, but how do I actually use this information? How do I combine it to be able to spot high probability trading locations during live market conditions? So in this section of the course, Chris and I will be sharing a couple of our live trades that we've taken using the information we have taught you inside this course so far. So let's have a look. So first out is a trade on oil that I want to share with you, a trade I am currently still in and holding. And now you may be asking yourself, okay, but why talk about oil? Isn't this about Forex? Inside the course, we've already mentioned that order flow and price action is not limited to Forex. It is actually applicable universally to any instrument and time frame out there. So, and I like to trade other things as well, and not just Forex. So I also trade stocks using these methods, and I also trade oil, for example, commodities. And this is actually a trade setup we recently shared with our members in the advanced price action course, where we teach other things on top of what we teach in this free course. But before I go into the details of my trade, let us have a look at a chart and I can explain to you what I saw and why I took this trade. So here you can see a weekly chart of oil, and based on what we talked in section 3 of the course, where we talked about support and resistance being zones, if you look closely here, you will see how this area here acted as resistance here back in early 2017. Price broke back above, it became a role reversal level like we talked about, it became support, and during Q4 in 2007 price found support, traded all the way back up to 75. Once price broke back below late 2018, it found resistance again. So again, a role reversal level, and it traded lower. So now that price in the beginning of 2019, broke back above again, I was interested in this area again. So going to the daily chart, you can clearly see the rejections happening here in this area. So here price broke below, it found resistance, traded lower, traded back up when buyers came in here, reversed price, and here it again found resistance, but there was really no follow through to the downside, right? So once price then, the bulls made a final push through, and then again we could notice, you see all these rejections happening here. Here a large wick to the downside. This told me that, okay, this one is again holding potentially as a support. So once I saw this, I actually went down to the 4-hour time frame and thought, okay, let's have a look and see if I can find a way for me to get involved in this bullish trend here, which is a short-term and mid-term bullish trend, as you can see by the higher highs and higher lows, higher highs, higher lows, right? So once I saw this, I saw also here you have the impulsive moves and the corrective structures. So you have a clear impulsive move up here, and then you have a corrective structure forming here. So then I said, okay, price has closed above a long-term resistance zone. You have an impulsive move through, it's followed by a corrective move, which told me that chances are good this will be followed by another bullish impulsive move. Now I missed this trade down here, unfortunately, because I saw this a little bit too late. I saw this false break to the downside and thought, okay, I want to get involved here. I placed a limit order, but price unfortunately never really pulled back to this area and just took off. So what I saw then was that, okay, there is a new bullish impulsive move that formed here, followed by a horizontal corrective move, right? So this was then enough for me to say, okay, this time I can see it. I'm with this one in real time. I see it ahead of time, so I wanted to go long And where I again went long was at this short-term key support area, because I was expecting a new bullish impulsive move to follow this impulsive corrective sequence you can see right here. And exactly that happened after I took my entry here. And this was what I shared here in the course. You can see here I shared the long-term support and resistance zone. It was broken. Talked about my long entry here, which was at the dynamic support. And here you can see my trade details. Here I entered my trade. I also shared my screenshot of my trading platform where you can see my entry right here. And I also shared the data window of my trading platform where you actually can see my open positions here. You can see my entry price at 58.50. My target is still at 63.86 and my stop loss was at 58.72. And here I already had moved my stop loss to break even, so this was a risk-free trade and is a risk-free trade for me. And now price is getting very close towards my target. And just to show you, this is not something created in afterwards, after the fact. It's actually that we share this inside our forum, these opportunities. So for example, here I've also linked to the market commentary where we actually talked and mentioned about this price breaking above this long-term resistance zone way ahead of time, and also talked about the false break here. I mentioned the trade I unfortunately missed, because when I saw it, this was actually here. I was hoping, as you can see in here in this screenshot, that price would pull back. My limit order was down here and it would take off. So unfortunately I missed it. But just because I missed this one doesn't mean I'm walking away from this pair, because the trend was still intact, the impulsive corrective sequence was still in play, and I was still interested. So I just waited for another opportunity to unfold, which it did. So I used the next best opportunity to get me into this trend, and it was a really great entry location, if I can say it myself, because the risk is very small. I get in at the exact price area where bulls came back into the market and pushed price higher. Another trade example of mine involving impulsive and corrective moves and sequences would be the US dollar versus the Canadian dollar. So let me show you what I did there earlier this year. So first of all, let's pull out a daily chart of the US dollar and Canadian dollar. And in this chart here, you can see I've still marked it, which is this area of support and resistance. It's not the cleanest one out there, but still there. You can see the strong reactions here to it in June 2018. Here also in November, December, when price got back, you can clearly see it is being defended. Then it had some unclean behavior here where it chopped through the zone a few times and then traded up towards 136. But as you can see up here, there was no real follow through by the bulls up here. So you have an impulsive move up, you have a corrective structure that forms here at the top, but what do you have? You have no follow through, no bullish impulsive move following this corrective structure. Instead, you have a very strong selling, very strong bearish impulsive move. And if you look at the strength and momentum of this move, it's way stronger compared to the bullish impulsive move here. You have 1, 2, 3, 4 candles, I mean, taking out all of this price action, which is 2, 4, 6, 8, 10, 12, 14. So we have 4 candles taking out 14 bullish and corrective candles prior to it. So this tells you that here a lot of bearish order flow entered the market, pushed price back below this area of previous resistance that got broken, but it didn't hold as support anymore. It just broke through back below, and now it should act as resistance again. And if we look at this on a 4-hour chart, you will notice something, which is that this impulsive move, this very strong bearish impulsive move, is followed by what? It's followed by a corrective structure right back into this long-term resistance zone. Resistance because it it didn't hold as support, thus it should be role reversal level. It should hold as resistance this time around. And as you can see, exactly this happened. Now, at first I was very interested in selling this long-term resistance zone as is, but I would have required a very big stop for this. So I thought I would keep an eye on this and see what price actually does around here. And if we go down to the 1 hour chart, you will notice again something very interesting, which is price trades up inside this corrective structure that we saw on the 4 hour chart. And you can see here the bullish impulsive move, corrective move, right? You can see this here on the lower time frame, which is also bullish impulsive, followed by a corrective structure here at the top, right? And what do we see then? Then you see this counter trend towards this short-term bullish trend, counter trend impulsive move, followed by a very small corrective structure. And this told me that inside of here, this corrective structure, if you have this strong selling and price really does not really react to the low part of this corrective structure here, you have an even minor and smaller corrective structure forming here. It told me that there's a lot of bearish order flow coming in at this higher time frame, long-term resistance zone, exactly what I was anticipating. So I got actually in here at the top of this smaller corrective structure. So we can actually break it down, go down to a 50-minute chart even further. Just have a look here. See it in greater detail. Remember, time frames are our tool to see things with a greater detail. So what I'm doing when I'm going down in time frame, I'm just zooming in on this price action here. Nothing has changed. The long-term resistance is still here. The corrective move, the higher time frame corrective move into the long-term resistance is still there. But what I'm doing is zooming in on price action here to see what's happening at the long-term resistance zone. And as you can see here, price trades in here, very strong selling, corrective structure. I was anticipating, okay, I'm saying, okay, here bears are getting in at the long-term resistance here. This is very strong selling. It's actually the strongest selling in the entire sequence here. If you see this, it's the strongest bearish impulsive move, followed by a very tight corrective structure telling me that bears aren't stepping off the gas. They still have the foot on the gas. I'm expecting a move lower, and this is exactly what happened. And just to quickly show, I have a screenshot here of this trade. I've prepared it here. So as you can see, price trades down. This is the 4 hour chart. Price trades down in this bearish impulsive move, corrective move back into the long-term resistance. I looked at the breakdown on the lower time frames. I saw the bearish impulsive move here starting, very tight corrective structure. I went short at 1.3327, and within 1, 2, 3, 4, 5 hours I made a lot of profit because I had a really tight stop above this corrective structure here. So I saw this corrective structure, I went short here at the top, had my stop above, and as you can see, really strong move down within the next 5 hours. And this was actually a trade opportunity we also shared with our members inside of the course. As you can see here, we wrote a counter trend impulsive move followed by a corrective pullback into this long-term resistance. So it's not just something we make up after the fact. It's actually things we are sharing live with our members. We're discussing them, and we're also trading them and sharing our trades with all our members. So I hope you found these two examples helpful to show you how to trade with a higher time frame context using key support and resistance zones and impulsive and corrective price action to be able to spot these opportunities efficiently. So make sure to ask any questions you might have underneath the lessons. We'll be happy to answer them for you. And thank you for watching, and see you inside the next video.